Hello all, welcome to today's Bank Nifty analysis, special expiry analysis. When we look at the macros, yesterday was a very crucial day for the markets, and we saw that the Fed delivered the 25 basis points rate hike as expected. So, and also the commentary when we just observe the market reaction to the commentary, the commentary was like the policymakers will look into the a future data point and then decide. So it's like not a very hawkish commentary, but it's just like a wait and watch stand on the future rate hikes decision. But how the charts reacted for that, looking to the macros, you see that dollar index yesterday post the look at the dollar index chart post the FOMC meeting. The dollar index just did a small spike and then it fell. So this reaction of certain key instruments such as dollar shows that the risk on sentiment is increasing. When I say risk on sentiment, it means that the sentiments towards the money flow towards risky assets. If dollar is falling, why is dollar falling? Dollar is falling because it is anticipating that the US interest rates might go down. So this will increase the money flow towards the risky assets, and that is why dollar is in continuous downtrend, and this sentiment is first positive. In fact, this clue is pretty much what the market was awaiting for the further rally. And our markets, as usual, we were discussing, it's bullish from past so many days. So when we look at the coming to the bank nifty's chart, yesterday I discussed one key data point. Or let me first hide today's price action and then try to explain this so that uh, this point is better conveyed. So I mentioned yesterday that the price took 50% retracement yesterday, and it bounced. Example, so this is the low point of the previous swing, and then this is the high point for that swing. So price took retracement at 50% level. So now this level was very crucial, because if any instrument is taking retracement from the 50% or even 38% or even 0.618 level, these instruments are usually bullish. So and keep in mind that we are seeing this analysis in a 15-minute time frame. Overall our markets are still bullish. So now when we start to analyze what the markets did today, yeah, see, market first opened itself at the it was a gap down opening. It opened at the lowest point, that is 4212. You can see here that the opening price was 212 point 70. So the since the opening price is the same as the retracement price, so it opened exactly at the retracement. In fact, it is a support. Retracement zone is a support for bank nifty, and since it has already bounced once, so it is like bouncing again. So good healthy retracement was given because of the global context, and then price started to rally. So just observe how the price moves. uh, comes down. Now it doesn't come back because it has already taken the retracement. It starts to go up, and usually what happens when the price comes down, takes a good support, like for example this may be point 0.3 or point 0.5, it usually hits back the previous swing. So that's what happened today. Price got back to its previous swing. We can observe here that the price ultimately went and hit the previous swing. So now yeah, let me just take this back a bit. Okay, no, it's not coming back. So yeah, so what I was trying to convey is it took the it broke the previous swing. So we must just see from the order flow also whether if there's of course it will be bullish, but just to confirm whether this breakout is coming with a good delta. Like for example, this is the 230 candle. So 230 candle, if we observe the order flow, you find that the delta is increasing. So the price has broken the previous swing 230. You can see at that with the increasing delta. This is what the confirmation we must look for, and then the price simply takes off. So just first let me complete the price action. Now we know that the price is about to break the swing, or it has broken the swing. Now how to find out the next targets? So for that you must use the retracement, I mean extension tool. Like for example, you can use the trend based extension tool. You pick the lower swing, hit the next hedging and find the retracement till where it is taken. So yeah, so let me explain this. So this was the first low, and this is the high, and this is the higher low. So what this tool tries to do is, based on this retracement, it tries to project where the targets can be. So you can see that roughly these were the targets which came out, 560 as well as 676. After Bank Nifty has hit both the targets, and since this target is very close, like for this breakout, 560 is very close, and Bank Nifty, we know, when once it breaks out, it can easily give 200 points more. So it easily hit this target. So this is how extension tool can be used to get the targets. But even when you use the let me remove this. Even when you use the other tool, I mean the same retracement tool for this entire up move, the if you just inverse the ratio in the calculation, you find that it's almost close to its next target. And by the way, this targets, in the coming days, definitely Bank Nifty is expected to reach. But the point here is that the chart is bullish, and we must just buy on the retracement. So buy on dip was a good strategy, and in fact, today was a day where one could have easily doubled the capital with whatever capital one would trade. So, and coming to the overall, if you observe the charges I've been discussing from past so many days, that the Bank Nifty has crossed the 61% retracement long back, right? So this is what I was discussing from so many days, that Bank Nifty had crossed, once an instrument crosses this 0.618. I mean, for this fall, it cross the 60% retracement level. So usually what happens, if it is bearish, it will not cross, right? It will get rejected and come, it will head downward. But once any instrument crosses its retracement of the 61% level, or even 50% for that matter, it tends to generally hit the previous high. So that is the high of 44,000 to 48, which is also the all-time high of Bank Nifty. So this is what we are expecting on Bank Nifty, and since it gave a closing above 0.786 yesterday, because yesterday it sat above the 0.786 level, I'm telling this yesterday's candle. So this is also one another bullish confirmation. So overall the charts are bullish. Now the macros are also sounding bullish, with dollar index being at the support zone, and it is heading downwards. So until unless something related geopolitical news comes up, I think the markets are heading the upward direction. And it depends on further more data which the Fed is looking at. Anyway, the market is factoring in all these rate hikes, and it is moving forward. So this was a simple chart showing that it is bullish from the word go today. And coming to the open interest was pretty interesting today, because Nifty was pretty strong in the morning. I mean, Nifty led actually from the word go. Let me show. Yeah, when you look at Nifty's call OI and put OI, like for example, when you take it till maybe 10:30, you find that, see, around the ATM strikes that was in the morning, you could see good amount of put writing vis-a-vis call writing. So this is the first, from 9:15 to 10:30, you can see that the put writing is way above the call writing. So this is, in fact, Nifty was strong in the morning. That is what made me also to trade Nifty on the upward direction than Bank Nifty. But Bank Nifty, once it crossed its psychological resistance of 43,500, it cut loose. So Bank Nifty, on, I mean to say this level, basically when Bank Nifty breached its previous high, yeah, let me. It also started to, yeah, basically this level when Bank Nifty crossed the swing high, right? So when Bank Nifty, yeah, when it crossed this level, basically the previous swing high, so it gave a good move. So this is a proper breakout type of move. But the issue is Bank Nifty was weak in the morning compared to Nifty, because of the relatively higher call writing. So in that sense, in the morning I traded the Nifty part. Coming to the yeah, overall, when you look at Bank Nifty's open interest, you find that a lot of once this 43,500 was taken out, easily Bank Nifty hit the in next target. So a lot of call unwinding towards the. But I just want to show some charts, like for example 18200 also had the call Y intact till 2. I mean, if you look at it, this is to 18200 call chart. So till 200, 18200 call Y was intact, but next in the next half an hour you can see that the Y starts to shred, and the calls were unwound significantly. 18200, which was the resistance for Nifty. And coming to Bank Nifty, it is 43,500. So you can see that it starts to unwind fiercely at around 2:30. So yeah, it was the last from 2 o'clock the move actually started, especially when the breakout happened. So I mean, this is how the moves happen in general. But the data sentiment was positive, and the clue about this also we could get from order flow. Now coming to order flow, the first candle of Bank Nifty is similar. I mean, since this opened at the 38% retracement, this we discussed. It is around 38.6% retracement of the FIBO level, so it's acting as support. So from it's like open is equal to low condition, and it is very bullish, opening at the retracement support. So again, the negative delta is getting lost. Again, a limit buying condition like yesterday. It's almost similar to yesterday's limit buying condition, but the candle is even more bullish. This candle is even more bullish compared to the yesterday's candle. And you can also see that the price took, since the candle is big, the price took a healthy retracement, and then it started to go up. But it took a lot of time to it spent some time here, and then gave a breakout. After that, there was no stopping Bank Nifty. The move was pretty much fantastic. So there's nothing too much to add from the order flow perspective here. One thing what I would like to convey is when people are not sure about the first candle's order flow, I mean about to gauge the strength of the instrument, you can just go for the order flow confluence concept and see the order flow of Nifty. So when you look at Nifty's order flow, Nifty is way stronger. It is 120k delta which has come up in the first candle itself. So this is also pretty much bullish. So after that, you never see a selling delta at all, right? So throughout the day, you see that there's no, the highest negative delta has come up to just 9k, and the price just stays there. It does nothing. So overall, I mean Nifty was very bullish. You could see hardly any negative delta, complete buying, short covering. So it was such a strong trending day on the upward direction. And even here, there was one point where a price started to, yeah, this point, this is a high point where price spent some time. You can see that once it makes a here it lost some delta, but this is very marginal because overall the day is running on a high delta thing. And then on this red candle, we see a good aggressive buying also taking place, and not losing much of delta. So wherever happens, the delta keeps on increasing. So this is a sign of a good buying at higher levels. So I mean aggressive buying. So order flow was pretty much clear today also, and yeah, even the OI also. Like for example, if I have to select the strike range of maybe 43 to 44, you can easily see that the call rating was also there. In the morning it plateaued at around the 11 o'clock a.m. This was the level at which the highest call rating took place, and then calls started to unwind and put. This is the key thing to observe, whether the put rating is steady throughout the day and started to increase. So this is how one could bet on the direction based on steady put rating throughout the day. So overall, the charts are looking bullish. Market is bullish, and let me take one more example of Nifty. So Nifty also did the same. Right? As I explained, look at the 15-minute time frame of Nifty. So again, the same logic holds. Let me replay this entire thing for Nifty also, so that the point is very clear. So this is what I discussed yesterday, that Nifty also took a good amount of support from the 50% level. So Nifty took support from 50% level yesterday, like Bank Nifty, and we see that it opened gap down, and it at least it took support from the same zone and it started to go up. So again, it is the same concept that it should go back and hit the previous swing high. So this over the direction is pretty much clear for the instrument. So as we proceed forward, we find that Nifty went higher, and then as it approached the resistance, it spent some time, as it was the previous swing high, it consolidated. This is how breakouts happen. See, if it has to get rejected, it'll just go there and it'll get rejected. So, right, so that's how it takes place. But if it is spending some good amount of time there, when you observe the order flow also at that point of time, it was pretty neutral. Uh, then it breaks out. You can see this order flow at around 215. So when you look at order flow for Nifty at 215, you find that yes, see a good delta coming up. That's also the same time when Bank Nifty also was trying to break out. So a good delta is a confirmation of a good breakout. This is what we could see in both Nifty and Bank Nifty, and the price continued to go higher and gave a good closing on the upside. So even for this, from the extension targets, if you look at it, take the same swing low and then take the swing high, and if you project the price, you find that yeah, it is close somewhere around the targets which is given 18,320. So closing is just around 280. It hit the target and it reversed and it closed at 0.61 extension level target. So overall, markets are bullish. So just stay with the trend. The strategy for such a thing is buy on retracements. So hope this analysis was helpful. Thank you.